Next, we are going to see the next stage in final accounts. What is the first stage? First is preparation of trading account. Trading account as on 31st December, the year ended, we have to write like this. And the second one is profit and loss account. Profit and loss account. We are going to prepare profits and loss account. Now, what is the use of this profit and loss account? It gives importance in the way, one, number, to know the net profit. To know the net profit or net loss. Net profit or net loss. And the second thing, it helps to know the comparative. It gives the comparative study of profitability. Third one, it control over the expenses. The profit and loss account gives help us to control over expenses. Control over expenses. Number 4, it useful in preparing the balance sheet. The profit and loss account useful in preparing the balance sheet. Okay. That means the balance sheet helps to know the financial position of the business. Now, there are two types of expenses. One is a direct expense, another one is indirect expense. What is direct expenses? The direct expenses are the expenses which incurs before the production. Indirect expenses are the expenses which comes after the production. That means other expenses other than the direct expenses, such as sales expenses, administrative and office expenses, and selling and distribution expenses, and financial expenses, all this thing. Now let us see indirect expenses. Indirect expenses will be debited to the profit and loss account. Indirect expenses are debited to the profit and loss account. Number 1, administrative expenses, administrative and office expenses. Administrative and office expenses. Next, selling and distribution expenses. Selling and distribution expenses. A third one is financial expenses. Now let us see what are the administrative expenses, administrative and office expenses. Now let us, for example, salaries paid to the staff in the office, and establishment expenses, preliminary expenses. At the time of establishing the business, some expenses they have to do. Those expenses are establishment expenses. Then office rent and rates. In addition to that, office lighting, that means electricity bill. Office lighting. Then number 5, printing and stationery. These are the expenses which are most important in the office. Other than this office expenses, there are some more expenses. We can call them as printing and stationery expenses. And in addition to that, legal expenses and audit expenses, insurance expenses, and traveling expenses. Finally, we can say trade expenses. All these expenses come under administrative and office expenses in case of indirect expenses. Indirect expenses are nothing but the expenses which incurs after the production. Now let us go to the next area. Number 2, selling and distribution expenses. Okay, now what are the selling and distribution expenses? Salesman's commission to be paid to the salesman, and their salaries and wages also we can include. Sometimes wages also paid for certain work, and packing charges. That means charges, goods are packed before taken to the showroom. And freight charges, and carriage on sales. Then comes export duties and sales tax. And sometimes there comes a sales tax and a home delivery expenses. In addition to that, we can take one more expenses which is called maintenance expenses. Maintenance expenses, general expenses. In third area is financial expenses. Now let us see what do you mean financial expense? If loan is taken means they have to pay the interest on loan. So interest on loan. Number 2, interest on capital. That means it should be paid to the owner. Number 3, discount allowed at the time of prompt payment. And the next one, rebate. When the bill are discounted earlier date, some reward should be given to the person who discounts the bill. So that discount is called the rebate on bills receivable. And sometimes there will be a loss on sale of fixed assets. Fixed assets will be there, and there may be journals, there may be newspapers in the business. All these will be sold after some time. So these are called as a loss on sale of fixed assets. Next, let us go to the credit side of the profit and loss account. There is credit side. Let us read the credit side. The first item will be the gross profit, which will be transferred from the trading account, gross profit, and this is the foremost important. And second thing, generally the gain on sale of fixed assets. And number 3, sometimes there is income from sale of old assets such as machinery, building, like that. Sometimes there will be a profit or gain on the selling of certain the journals. And commission received will be the one of the income. And other than that, financial and other income. Other than these things, financial and other income also will be there. And then other than this, what are the other incomes? Let us see financial and other incomes. What all will be there? Number 1, discounts received. Already we have discussed about this. And interest. Number 2, interest on investments. And rent and rates. Rent received, rent and rates received. May have the own building, the rent and rate received. Dividend received. dividend received. Then comes any other miscellaneous income. Any other miscellaneous income is also taken to the income side, credit side of the profit and loss account. Now let us go to the another area which is called format of the profit and loss account. Now let us see the format of the profit and loss account. It will be like this. Amount column, particulars column, again amount column and particulars column. Now let us see profit and loss account for the year ending 31st March 2019. Okay, now let us see. This is the debit side, DR side. This is CR side. Now let us see the particulars amount, you can call it as 3, and particulars amount. The first and foremost item here is a by gross profit. This gross profit we are transferring from the trading account. Whereas in case of gross loss, we are writing a 2 gross loss that we are transferring from the credit from this side. Okay, opposite side. From here we are actually this is a balance brought down. Credit side balance brought down. If the gross loss is there, debit side balance brought down. Instead of calling it as a, we are calling it as a just by gross profit, by gross loss. Here in addition to that, we are adding income received. Income received, what are the income so far we discussed, that will come over here. And here in case of gross loss, we have to write like the first item will be the 2 gross loss. Otherwise we have to write 2 administrative and office expenses. So far we have discussed. Then second one, selling and distribution expenses. Third one, financial expenses such as paying interest on loan, paying interest on capital, and in addition to that we have to take the depreciation. This is an invisible, depreciation is an invisible loss on fixed assets. Assets, that means such as land and building, furniture and fittings, and machinery, etc. Depreciation. And bad debt. Bad debt is amount not paid by the customers. It will be treated as a bad debt. The difference, if this income side, this is credit side income is more than the debit side, we can call it as a net profit. When the debit side income is more than the credit side, it's called net loss. Okay, we'll see some problems. So we'll work out some problem, then we'll see.